Hey there, it's Francis and it's Gulfsands Petroleum update. So here we are. This is the daily chart. This is our primary setup over here. We saw the support coming in at 75, later at 77, just under 78 levels, and then just at 79, barely holding, barely holding. Each time a lower high, then just running the 100 pound. This was our break, feign, return move, second chance short. All going perfectly to plan, and the trades worked exceedingly well so far. What else can I show you on the platform? Well, we can also show you something else quite interesting, and I intend to do that, so let's get straight on with it. Here is the second interim, which I'm going to draw live in front of you, virtually to the 79 level, and that joins us over here. So that literally ran us down to the 50 level. That said, you will have some form of target-based reaction, HVF theory states, at the end of an interim, particularly on a long move which is involving essentially a 70% market cap loss, which is exactly what was called for here. And as you can see, this second interim has taken you to the 50 pence mark perfectly. Now typically interim targets are just run, they're not exactitudes, they are just run. So key levels are just run, and so are the key round numbers, always typically just run. So there we go, we got a clean run of the 50 level, and as you can see, that's exactly how it happened. As we ran here, and we ran through the 50 level. Then you should get a reaction, HVF theory says. You should get, following a key level being run, a reaction, and that's exactly what happened. We got a reaction, we got quite a strong reaction. It came almost back to the funnel. 77, the break was 79. Too much resistance back down, and then sat and based at that level. So that was particularly interesting too. Note also how the first interim of the major target, there, that served as a key level for us on our primary pattern to there, and it was met, and then we had a rebound. So everything was going to plan perfectly on this primary pattern. I've showed in previous clips that there is in fact another pattern that occurred even before this in the direction of the trend, and that this actually generated a line right through here at the 90 level, key round number 90. You can see the pinning of the price action on 90. Later you saw it at a full pound. So it's been totally HVF compliant here, this chart, and I'm very happy with the performance in terms of HVF theory. And then we went into this holding pattern over here, and this, unsurprisingly, the midpoint for that is 60 pence. Literally to the mark. So here is our low one. I want to go down to a 4-hourly and show you what's happened here. In other words, we are progressing well, and we've got something that I believe is moving towards actually losing 50% of its market cap from its current point. Bear in mind, our original call was when it was at £1.02, and it went to £1.250, that it would lose 70% over, in excess of 70% of its market cap, and would trade sub 30, that is that point there, sub 30 there. So we were calling for an in excess of 70% route, basically close to 75% route on this particular stock in terms of its market cap. So that's quite interesting. It's a big shout. So I've said this before, so let's get a closer look at the final three impulses and what's going on here. So here we are. Let's expand it a bit, lift the chart up, and expand it a bit more. So essentially I'm taking you into this part here. This was our low after running the 50 interim. I haven't extended it through, it would have got a bit messy. That was our low over there. That was the reaction high. Back down, secondary low, base there for a while. Also 70, clear cut high, as you can see. There it held, there it held, there it held, there it held. So there was also a key level that wasn't allowing the price action back up. Then we've made successive tweezer top highs at the 63.75, and then there were all these little lows. So after that high, down, 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 this was essentially our low over here. But the deepest dip was straight after the rejection of the 70 level, so we take that, and that was down there. Since then, spinning tops, classic HVF theory, and we actually tripped through the low there, and we had a weak day with an attempt to get back in. To me, this is almost itching to go tomorrow. And and I believe will spill potentially. This would be your first interim if we do that, and we spill down, and this is the second interim on the smaller pattern, which would just take you through the previous lows. What happens? Support and resistance traders, they all get mugged into that. They go short, and then of course you get a wee rally. Finally, the full target I put way back here to avoid excessive clustering around this drawing, but that's down there. Where does it charge us through the 30 level, down in the 29s. Where's our full target level? It's the 28 levels. So that's incredible clustering and confirmation of the likelihood to trade to the 29-28 level. So that's through the 30 level. So this little mini HVF, in my view, is now a break. It ran the third low. The stop can be as tight as 63.75. To be super safe, you can park it over 70.30 and then trail it back down to 63.75. Look at the volume attempting to defend this. We haven't had this kind of volume. This is April. We haven't had this kind of volume since February. So pull it through, pull it through, pull it through, pull it through, pull it through. March, still haven't got 300,000 in volume. Here's the first point, I think, in February, where we actually get a piece of data where we trade over 300,000. No, in fact, I'm probably going to have to zoom out to show you that. Let's see it. There we go, 300,000. Last time we traded over 300,000, not this year. So that's incredible. Not this year. You'd have to go to December 2012. So you had an all-time high volume today in an attempt to defend this level. This baby's going. That's my take, and I think consider this quite high probability. Could I be wrong? Of course I could be wrong. Could it break up? It's possible. Is it likely? No. Trend is down. It's been highly HVF compliant. This macro has been incredibly on time and behaving well. The previous one was perfect and gave the key level of 90, which is virtually the midpoint here. It has been probably the cleanest HVF. That's why I banged on about it so much. It's a case study. I'm taking plenty of chart pictures of this. And now we've had massive volume. Remember, volume precedes price. Volume precedes price. So watch out for this. I'm calling it short. I'm calling it a takeout of these levels. It's at 57.50. It's going to lose its way through 30. That's right. Something that has been as high as 77 pence in the last 6 weeks and as high as 70 pence within a month is going to go through 30. So that in itself is another 55-60% call for loss of market cap on this underlying. So without further ado, watch and enjoy. I think this one is imminent. Be short and good luck with the trade. Any position that you can get short, it would be 57.50 and stops once it starts its moves as tight as 63.75. If you want to park them the other side of the 70 line at 70.30 plus 5 or 6 pips, you're okay as well. And then you can trail here. You can trail it once you've run your first interim or the second interim. We shouldn't run this, see this level again. Nice and tight, good profits, nice high risk reward entry trade. That's it from Francis. I hope you enjoy this. Share GPX.